Good afternoon, everybody, and welcome to a Friday edition of the Daily Recap. My name is Pete Renzulli, Chief Marketing Officer of T3 Live and Class B member of T3 Trading Group. Before we get to the charts, I'd just like to touch on a couple of points that we had covered in the Active Trader Mentoring Room today, and it relates to the difference between which stocks you would trade as an intraday trader versus stocks that you would call out from a swing trading perspective. Now, to make a long story into a short one, it essentially boils down to this. As an active intraday trader, not necessarily somebody who's holding something today and getting out tomorrow, but somebody who is trading intraday and looking for intraday volatility, but at the same time being able to manage the downside, versus a swing trade where maybe you'd be building the position to get out maybe 3 days from now or even tomorrow. It doesn't matter. Just something. It's not, the intention is not to get out today in one piece, in one order execution. It's very, very important when you're game planning and entering trades that you make a very clean distinction between which of those two trades that you have. In my experience, which is quite a bit right now, only as an intraday trader, most of the traders that I have been around, and myself included, gravitate towards market leaders, industry and or sector leaders that have plenty of liquidity, and you tend to want to learn how to trade a little bigger size so you can take advantage of those intraday moves but still be able to get out reasonably where you would like to. If the stocks you're trading are illiquid, and meaning there's not that many people trading at each level, it's very, very important that you know that's going to be a scaling out of that position over time as opposed to an emergency of just hitting the bid of the offer. So as you're building your game plans, make a very clear distinction between those two things. And actually the second part, we can actually go right to the charts and take a look at the spiders, and it's going to make my point for me as a very quick game planning tool. You'll notice on the charts that we actually have the 8, the 21, and the 200 period moving average here, but I want to focus more so on the 80 MA. One of the most popular questions that we get in game planning is asking, how do you pick from a vast majority of stocks to ultimately get down to the list of stocks that you want to be looking at for tomorrow so you don't miss the better opportunities? So essentially what I want to get across here is, you can see here on the spiders, for all of this year so far, we have not closed below the 8 exponential moving average on the daily chart at all. It is a very, very good, quick reference point to determine which are the strongest and or weakest stocks immediately to run a scan, and then ultimately you'll take the next step to say how much room does it have to go, what is the downside, how far has it gone. So add to your gaming plan in the morning when you're doing your scans, whether it's 8 or 10 period moving average, something shorter than the 20 or the 21, and say which stocks are currently closing above with consistency and or which stocks are currently closing below with consistency, and those stocks will tend to have the best relative strength or weakness, and you should focus on those the next day. Now, to take that a step further, if you have a bigger list, like one of the guys in the room today, Harold, had 49 stocks in his list, and he said, how do I break this down? Well, let's say you're crazy enough to have that many stocks in your game plan anyway. You basically want to say, okay, these are my longs, these are my shorts. So let's break it down and say we got 25 and 24, 25 longs, 24 shorts. Now you're going to filter it from which of those stocks are doing intraday what I saw on the daily chart. So this is just a way of filtering quickly through a bigger list of stocks and say which stocks are doing what I want to see right now. So the way that we essentially walked it through is we said, where is it trading from the opening price? Where is it trading from yesterday's high? Where is it trading from the previous close? Where is it trading from the opening 15-minute candle? In other words, is it above the opening 15-minute candle or any one of those other reference points, or below? So essentially, you're looking for intraday confirmation on a longer-term idea. So a really quick game plan primer. Where are you from the 8-period moving average on the daily chart? How many times have you closed above with consistency, as in the spiders here, the entire year so far, or below? And that'll be the list that you start out with, and then after the market opens, you have these reference points or significant reference points to read the tape to find intraday price action confirming your longer term idea. So a very quick way to cull a really big list down to actionable ideas and ultimately actionable intraday opportunities. So getting to the list here, you can see the black line that I drew. Spiders right now has actually just cleared resistance. Yesterday it touched it. Today it actually got above and closed above that level. Actually, a couple of minutes to the market close where it's actually above it. So what's going on right now? It's universally agreed right now among most of the active traders that I'm speaking about right now. Intraday activity has been very sporadic and kind of like stop and go traffic. So the thought process that a lot of traders are having right now is intraday new longs have been a little frustrating because you're not really getting paid because we're not really having the volatility, which we can get to the VIX in a second. But the short side of the market is clearly not the right trade because not everything, most stocks that we'd be looking at are clearly in uptrends and or breakouts or above most of the key moving averages. So we're in a tough spot right now from a short-term active trading perspective. You could make a case where some stocks have gone several days in a row. We'll take a look at Chevron in a couple seconds. It actually had a really nice 6 or 7 day run, starting to peter out just a little bit. But here's the key. When you get into these opportunities where you're at a clear resistance level, a clear support level, but the side of the market is also at a support or resistance level, and the intraday volatility, you're not seeing a flag, a push up and a flag, a push up and a flag. We're not getting that kind of activity right now. We're getting spikes up, spikes down, and you look at the end of the day, you say, oh, it closed higher. Why didn't I make any money? It's a tough tape right now. We don't have that intraday fluidity, and if I can go to the VIX here just for 1 second to make the point. The VIX is now down at 12.5. And if we go down to the monthly chart, this is the lowest level that the VIX has been at in roughly 5 years. Now, I'll go back to the daily chart and we'll pull up the spiders again and make a point of why that's so important. As the VIX is contracting, the VIX is essentially telling us how much stocks can be anticipating that they'll move. The lower the VIX, the lower the intraday volatility. The higher the VIX, their stocks are fluctuating from the low to the high to the low in wider range. When the VIX is in, let's say, 20 to 25 area, maybe even above that level, I run a scan that's 2 million shares, average true range of $1.50. When the VIX gets up into that range, that list of stocks could be anywhere between 60 and 90 stocks. Right now, that same list is 23 stocks. So the point that I'm making here is you are going to see some clean setups on the daily chart, but the intraday price activity has been tough to justify putting on positions because we don't have that push intraday to justify the risk you have to take. It's been a little frustrating. So again, just as another tip that you might take from your trading plan and add into your trade management, as the VIX continues to drop, the intraday opportunities are going to contract as well, and that's what we're starting to see right now. So make sure you adjust that in your game plan to not overtrade, don't have too much size, and when the market gets a little bit cleaner, we start to see some bigger green candles like the last few days we saw in Chevron, and obviously Goldman we'll touch on in a second, but the overall market is contracted. So the advice I'm giving you now, or the mentoring here live, I guess, would be actually lower your expectations until we start to see some clean intraday continuation patterns. So we just talked about the SPY breaking out through that level. We're going to go to the charts and look at a few more stocks. We will go to the T3 granddaddy of stock you must talk about no matter what, Apple. Apple's in a tough spot right now. We've actually pulled back. We had a little bit of a spike there at the end of the year, and it looked like we might have been starting to bounce a little bit after we hit that 505, 507 number, and it just has not held. So now we're basically hovering right around the 500 number. In my opinion right now, Apple could go either way. And when you're at the point where you feel like a stock could go either way, that's a very tough position to say it justifies the risk. Everything in trading is all built around probabilities and how much risk do you have to take based on the probabilities, and does it justify it? Apple's a tough spot right now. Again, you want to see some intraday continuation pattern. All the key moving averages are pointing down. So the longer time frames are pointing down. We pushed through 500 and we're kind of hovering right at 500. We didn't get that big short covering spike off of 500. So you have to say the big blue line's still pointing down until otherwise. All right, next chart, we're going to look at three stocks in the same industry. BHI, you can see clearly here, taking out beautiful, beautiful line of least resistance, as Jesse Livermore would call it. Next we have in the same sector, Schlumberger. Very, very nice follow through here again as well. And we'll go to the last one in that sector, Halliburton. So some really good stocks to be looking to game plan on not Monday, the market's closed, but Tuesday. One thing about Halliburton, though, out of the three, Halliburton seems to have the resistance the closest. So I'd probably be leaning a little bit more towards the other two. Another nice move today to begin planning. State Street, STT moving averages have been in all of the right order going on a couple of months right now. We finally got some follow through today. Really nice clean $2 trading range. Looking for some follow through there as well on Tuesday. Goldman Sachs, what can you say? This stock has been, again, eyeballing quickly above the 8 EMA. This stock has closed below the 8 EMA on the daily as a relative strength trade once since mid-December. And even that day, it was an inside day in a very tiny trading range and recovered immediately on an outside day reversal very quickly right over here. So great relative strength. Now, the question is how do you buy a higher opening at Goldman Sachs? What are the odds after how much it's moved basically from one 117.50 to 144 in relatively 4 or 5 weeks. I think the better trades right now are probably waiting for some sort of consolidation intraday or a lower opening to find a spot to bid, because right now buying that higher opening after it's moved this much distance, the probabilities start to diminish for a gap and go after it's moved that much distance. They're much likelier to follow through if you're just breaking out of a range. So obviously still like Goldman on the upside. Just make sure that you find an intraday spot to manage your downside. Okay. Next, Capital One obviously had earnings today, got hit pretty good. Had what we've been getting a lot of. It was down 7.5% right out of the gate this morning. It pretty much was on a trading range for a decent part of the day. We had one little spike on the open, but you could see it gap down, held that support on the charts, as well as having the 50-day EMA just below there. So obviously I'll be looking at this as a short sale on Tuesday. To follow up, Caterpillar, following along the lines of some stocks that are actually having some nice follow through. If it will come up. Okay. Really nice clean breakout. This was a little bit of a wait and see to see which way it was going to go. But again, look at the solid closes above the 80 MA after the gap up, held it, and now a pretty clean breakout. And more often than not, when stocks start to close in on 100, you can reasonably say the 97 through 100 would be the next area that you'd be looking to trade long between there and 100. Next, an interesting one, Cisco. Cisco actually still holding pretty well, and the amount of green candles on this stock or closes above the open over the last several months since this gap up in November is actually pretty impressive. And you can see clearly not necessarily monster intraday trading ranges, but really, really clean persistency in the price action. Some oldies but goodies, including Cisco. We'll go back to GE. GE finally breaking out of this 3 or 4 month trading range right here above 22. I do like it if it holds above 22 on Tuesday. Looking for 23 as the first target. Next one I haven't called out in a while is Travelers. Really clean start to the year. Once we bottomed out here in mid-November, we had a nice push up, held resistance. Another great example of multiple time frame analysis and knowing your levels. Backed off of that a little bit, hit that level, got above 74 and all the way up to 76 and change right now. So I think that the better trade here after it's closed above the open now, 1, 2, 3, 4, 5, 6, 7, 8 days in a row, would be to let the stock catch its breath a little bit, as Scott likes to say, and Mark says the same things. Let it rest a little bit, probably around 74.50, maybe just a little bit higher than that to look for the next bid on a nice little flag if we get that next week. So make sure you get the price that you want there. Some of the retailers catching a little bit of a bid, although most of them are in downtrends right now. TJ Maxx had that good earnings report when it had that gap up about a week and a half ago. Pulled back a little bit, basically filled the gap, and now it's approaching the level on the gap up. So that's showing a little bit of strength there. Macys, again, not necessarily something we're going to look at yet. However, we're starting to see a lot more closes above the open, and we failed to push through that 36.50 3 times there. So we basically got a really solid double bottom. I'm not saying get involved yet, but you need to have an alarm set for basically this 39.50 level, because then after that, you're looking at a $2 next resistance level of 41.50. So have your alarm set in Macys at 39.50. As long as it stays in that range, the bias isn't as good, but if it starts to trade above there with some big green candles, it should be good. And last but not least is Kohl's. Not quite what the other ones are doing, but it is bouncing and showing a little bit of a double bottom at the same time frame. So again, the retail is not necessarily something that we'd be looking to jump into right now, but absolutely something to keep an eye on, and especially setting alarms at those levels that are some key levels that are on the charts that are easy to spot. So that basically wraps it up for the recap today. I hope everybody has a great weekend. We have the Trader Lab next week here in New York City. First day is going to be Monday. For those of you that will be around in February, we are having a 3-hour educational event / networking / cocktail reception on Monday, February 18th, which is the next holiday in February. So look for an email today for some details on that as well. So have a great weekend, everybody, and we'll see you on Monday.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.